Ladies and gentlemen, good day and welcome to HG Infra Engineering Limited Q3 FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal for an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rishabh Das from Pareto Capital. Thank you, and over to you.
Good afternoon, everyone. This is Rishabh Das from Pareto Capital. We represent investor relations for HG Infra Engineering. On behalf of HG Infra, I welcome you all to our Q3 FY22 earnings conference call. I have with me from the management, Mr. Harendra Singh, Chairman and Managing Director, Mr. Rajiv Mishra, CFO, Mr. Vinod Giri, Operations Head, and Mr. Sanjay Bapna, Group Finance and Accounts Head. We will have brief opening remarks from the management, followed by the Q&A session. Please note that certain statements made during this call may be forward-looking in nature. Such forward-looking statements are subject to certain risks and uncertainties that could cause our actual results or projections to differ materially from these statements. HG Infra will not be in any way responsible for any action taken based on such statements and undertakes no obligation to publicly update these forward-looking statements to reflect subsequent events or circumstances. I would now hand over the call to Harendra Ji for his opening remarks. Over to you, sir.
Thank you, Rishabh. Good evening, everyone. I hope all of you and your families are keeping safe and healthy. This quarter, we continue to witness robust execution and delivered a strong performance of 25% revenue growth year-on-year to reach at rupees 916 crores. Our commitment to execute projects timely and efficiently have continued to result in strong EBITDA and PAT margins of 15.9% and 9.7% respectively. Before sharing the financial and operational highlights, let me take you through the opportunities and outlook of the sector. The recent budget has outlaid about 7.5 lakh crore of capital expenditure, which is higher by 35% compared to last year. A major part of this will be spent in development of infrastructure. The government's push to bridge connectivity across urban and rural areas under the Gati Shakti Master Plan is expected to expand national highways by 25,000 kilometers during next financial year. During the 9 months of this financial year, NHAI has awarded over 2,400 kilometers of national highways, out of which 1,400 kilometers worth were awarded on HAM basis, while around 1,000 kilometers were awarded on EPC basis. We have witnessed good pace of awarding activity, while issues that were impacting the sector historically have drastically improved, like timely payments and faster land acquisitions. NHAI's robust capex target of rupees 7 trillion over next 2 years bodes well for further awarding activity, with 5,000 to 6,000 kilometers being targeted annually during the period. Now let me share a few operational highlights. Our total order inflow for the year stands at 4,326 crores, taking into consideration of the recently awarded Karnataka project. That includes one order win in month of January. That is the one which I am talking about is Neel Mangala Tumkur, valued at 844 crores. Our order position stood at 7,950 crores as of 31st December 2021. And this doesn't include the EPC project which I just mentioned. Taking this into account, it is now at 8,794 crores. 8,794 crores. We have achieved major milestones in several of our projects which helped drive growth in this quarter. We are glad to share that we have received the PCOD of our Rewari Ateli Mandi HAM project, which is the first HAM project which we have completed, and that is 147 days ahead of schedule, and we are eligible to receive a bonus. Also, we have recently received PCOD for Jodhpur-Jojawar, that is a state POT project, in the month of January, and this is effective date for PCOD is 15 November 2021. I would like to brief the forum now on the progress we have made in our major EPC projects. We have executed close to 95% and applied for COD for Delhi-Vadodara Package 4, that is the EPC project, and we expect that during this month we will be getting the COD. In DV Package 8, we have made good progress and have completed around 59%. In DV Package 9, we have completed around 42%, and that is ahead of the schedule as far as the milestone is concerned. In Hapur-Moradabad EPC project, which is the IRB one, we have completed close to 70% of the work, and we expect to complete the project in first quarter of FY23. In the Mancherial project of Adani, we have executed 60%, and we expect to also complete this project in FY23. That is the first quarter or maximum by second quarter. But there is a bit delay in this project because of the pond ash issue, where the NTPC has banned the pond ash supply for a few months. And now it is already picked up, and we expect very soon it would be completed. In the latest EPC project, which we were awarded in the month of October, that is the Kerala-Khanjawala in Delhi, UER, the appointed date was declared on 28 October 2021, and as of now, 90% of the land is available in the said project. I would like to mention that due to NGT ban on this of the construction activities in NCR, the construction has just recently started, and we expect now onward it would be picked up at a very fast pace. Coming to our HAM execution, the HAM portfolio, where they are all progressing well and as per the scheduled timeline. We are close to completion of Gurgaon Sona, which is the first HAM project which we got, and that is about 98% completed. We expect the PCOD may be issued by end of this February. In Narnaul Bypass HAM project, we have made considerable progress and having completed 97% so far, in which PCOD is expected by February end or say first week of March. And lastly, where the execution is going on is the Rewari Bypass HAM project, which we have completed around 45%. Let me now touch upon the status of latest HAM projects which we have added this year and 3 more during the last year in March 2021. In Raipur-Visakhapatnam Corridor Project AP1, which we have signed the concession agreement on 14th October 2021, the appointed date is expected very soon, say likely in the month of March 2022, we would be getting the appointed date. In Khammam-Devarapalle Package 1 and 2, though we have received the LOA of both the packages in month of September, but the agreement is yet to be signed for both the packages, which is likely during the month of February. The land status in both of these projects is not that significantly, so thereupon we believe that the appointed date is, which we were expecting in the month of April or May, is likely to be delayed by 2-3 months. So most likely in the month of August or September we would be getting the appointed date. Lastly, in 2 new HAM projects, which are Raipur-Visakhapatnam Corridor Project of Orissa, package number 5 and 6, which we received LOA in the month of October and signed the concession agreement on 14th of December 2021. We expect the appointed date in first quarter of FY23. We are in progress of financial closure of all these projects. We have already received the NPG of most of them, and some of the banks, the final sanction has been given to us. We expect that as per the timeline, we are going to conclude the financial closure. For these 9 HAM projects, we have a total equity requirement of 1,137 crore. That is projected till FY25. Out of this total amount, we have already invested 290 crore as of December 2021, and we project to invest another 150 crore during the remaining part of this financial year. Before I share the outlook and the guidance with you, I would like to hand over the call to Rajiv Mishra to touch upon the financial highlights. Over to you, Rajiv.
Thank you, sir. Good afternoon, everyone. Let me brief you on the financial performance for the quarter. We are very pleased with the performance of our company. We have delivered excellent numbers. Standalone revenue stood at rupees 916 crores, a growth of 25% year-on-year. We reported an EBITDA of 145 crores in this quarter, maintaining strong margins of 15.9%, while PAT stood at 89 crores with a margin of 9.7%. As far as 9 months performance is concerned, revenue stood at 2,577 crores, a growth of 72% from the same period last year. EBITDA stood at rupees 416 crores with a margin of 16.1%, and PAT stood at rupees 248 crores with a margin of 9.6%. Our efforts to strengthen our balance sheet continue to remain our focus. Total standalone gross debt as on 31st of December 2021 stood at rupees 313 crores. This includes working capital debt of rupees 44 crores, term loan plus current maturities of rupees 173 crores, and NCD of rupees 97 crores. Cash and bank balance on standalone level stood at 61 crores. Our consolidated debt stood at rupees 1,054 crores, which includes project loans of rupees 741 crores. Cash and bank balance on consolidated level stood at 63 crores. That is all from my side in brief. I will now hand over the call back to Harinder sir for his final remarks.
Yeah, thank you, Rajiv. Finally, let me brief you on our guidance and outlook for this financial year. We have demonstrated a robust execution track record during this year and remain committed to our current year FY22 year-end guidance of surpassing 3,400 crores revenue with 550 crores of EBITDA. Our focus remains on winning profitable projects without compromising on our margin. We currently have a bid pipeline of 25,947 crores, both under EPC and HAM, and we expect to receive some of these orders during this financial year. Having already won over 4,300 crores order during the year, we remain on track to achieve a target of 5,000 to 6,000 crores of order inflows in this financial year. We are optimistic and believe that infrastructure sector has abundant opportunities, which can be very well correlated with the recent budget announcement, where government has envisaged Gati Shakti to gather space with 25,000 kilometer highway expansion. The long-term visibility of awarding activity and government spending rightly positions us to tap into the various opportunities coming in our way in the road sector, and our major focus would remain in the sector to grow multifold. Now I would like the moderator to open the floor for the question and answers. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1 at this time. The first question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Thanks for the opportunity, sir, and congratulations on a very, very good set of numbers. Sir, first question, the guidance for FY22, given the fact that we already done roughly 2,700 crore by Q3, won't be Q4 will be slightly higher numbers, so we should revise our FY22 guidance. And secondly, on the FY23, a large part of our order book is awaiting appointed date. Does it mean that the growth in FY23 on FY22 will be slightly will be a challenge, and all this will come in FY24?
Yeah, sure. First question is that we have given a guidance of surpassing 3,400. That is not that we would be targeting at 3,400, and we likely that during the quarter 4 of this financial year, execution is going on well. Only a few of the concern was there when I think because of the acute winters and some rains in the north zone, and some projects were stalled for NGT construction ban. So that has been the reason, but definitely it will not be less than the last year quarter 4 number. That is all we expect during the quarter 4 of this year. As far as FY23 revenue, if you see that whenever we have seen a balanced order book, if you see into that, there are 5 HAM projects where the appointed date is yet awaited, and plus 1 recently awarded EPC project. This EPC project which we recently awarded, where the land is going to be provided by NHAI in 2 phases. That is a 3 years duration project. In 2 phases means the first phase is already available, where we expect that about 50% land. Giving that, the appointed date would be given to us very soon, within a period of 2 months. And another, say, on the EPC, the HAM project, wherein I think if you are talking of Raipur, Visakhapatnam, those 3 projects, say, side by side, their land availability is very, very good. I think Raipur, Visakhapatnam being the PM focused announced project, and there the land availability, everything is approaching very fast. Same month of March, 100-something crores of EPC value, and some 2,200 crores of EPC value, OD 5 and 6. Though we have been, though they were awarded in the current financial year only, but we would be getting the appointed date most likely in April. So with that, I think seems a big challenge that for the financial 23, what we are targeting at about 15 to 20% year-on-year growth would be a big challenge for us.
Secondly, sir, you have won an order in Karnataka recently in EPC, and that was a very, very competitive bid, and our number far, far lower than the NHI estimate. Is that we are trying to enter into a new geography and we are sacrificing margin? Is this an entry strategy?
No, nothing like that. This is our own estimate where we have kept our say profit intact, which is equivalent to about 13-14%, which is as per our rough guidance, which we always take into our estimate for any EPC NHA project, and that is again in the same line. And while we have cross-checked again our bid, it is well in line as we have estimated. Site visit is deliberately conducted to recheck if anything is really gone wrong, but we are on that and we would be making good decent margin in that.
Lastly, sir, is there an impact of raw material inflation in this current quarter on our EBITDA margin?
Yeah, definitely. You have seen our EBITDA margin lowering down, which would have been expected, but we have experienced a hit of about.
Participants, request you all to please stay connected. It seems you have lost the line for the management. Apologies for the delay. We have the management reconnected now. So you may go ahead, sir. Mr. Singh?
Yeah, I am very much here.
Yeah, please go ahead, sir.
Yeah, sure. Yeah, I was just finished my
EBITDA margin, yeah.
Yeah, next question, please. I think you can.
EBITDA margin, we're asking the price variation.
The EBITDA margin, we asked, what the impact of EBITDA margin?
Okay. I am just indicated the EBITDA margins, which has been impacted because of the commodity price, definitely, that by 0.4 or 0.5%. That's why it's lower down to 15.86% on actual basis. But likely, I think it is now where the price variation and everywhere, this is mostly where high commodity price, now they are substantiated and now they are well within the range, and we would likely to improve upon the margin by, say, plus 16% plus in coming quarters to come.
Thank you, sir, and best of luck. Thank you.
Yes.
Thank you. Next question is from the line of Alok Deora from Motilal Oswal. Please go ahead.
Yeah, good evening, sir. Congratulations on great numbers. Sir, just wanted to understand a little bit more on the order pipeline because, the order book currently which we are having and a lot of projects are not, started. It's actually almost nearly roughly 1 time to the current revenue run rate in terms of execution. So just wanted to understand the visibility on new order flows and how we are seeing the execution picking up going ahead in 23.
The orders already were, as far as HAM already given that indication where exactly we are likely to receive the appointed date. We are approaching very fast as far as completion of the all 3 HAMs or the 4th one, and as well as all 3 EPC projects Definitely, these private EPC projects of Adani and IRB, they are likely to be completed by June, max, say, Adani by Q2. So with that, that's the more visibility or where the appointed date is availability, their execution in Q3 and Q4 would be picked up. In all these HAM projects, which we believe that in Q4 of this, Q1 and Q2, we will be getting appointed date of all the balance. So it doesn't seem that there would be a big challenge as far as the balance at order book of 8,800 odd crore rupees, where what sort of execution would be there in 23. Definitely, as far as new order is concerned, we are very much there, and we are bidding few of our selected HAM and EPC projects, where the land availability and everything is mostly there. And so only a matter of bit concern where in the Rangna project of Common Devarapalli, it hasn't been delayed. Otherwise, everywhere the HAM project has been where the award to appointed say 8 to 12 months. That is the standard time which we experienced. But again, we are in as we are approaching completion for IRB and Adani, we are looking at the opportunity in Ganga Expressway. They already at an advanced stage of discussion. So there again, if anything is there, I think within 2-3 months, because there 90% plus land is available. Before UP elections by April, the work would be commenced in these stretches. Most likely, as we are approaching, because it's a current order book is about just 10 to 12% is the private field as a current balance. So we are at an advanced stage of any further orders which likely we can get from these.
Sure, sir. And also, just if you could throw some light on the current competitive intensity in the EPC and HAM projects.
In EPC project, you have already witnessed, and we are also experiencing the same. The aggression is quite high. But as far as HAM project is concerned, with the recent modification in the giving any project to those bidders who have ample and say good amount of works in hand, there the government is restricting them as per the bidding capacity being restricted based upon the where they already stood L1. So with that, I think few players would be restricted for further bidding activity. So with that, slight of a correction or improvement plus side would be likely to be expected.
Oh, got it, sir. Just last question. So have you bid for any projects where the bid is yet to be opened? If you could just give the value there.
Yeah, sure. There are many bids, about 12,000 odd crores of projects which we have already bidded. In HAM, it is about 7,000, and EPC remaining are in EPC, where the bid opening is yet awaited.
Sure. Thank you, sir, and all the best.
Thank you.
That's it from my side.
Next question is from the line of Shravan Shah from Dolat Capital Markets. Please go ahead.
Yeah, thank you. First of all, congratulations on a great set of numbers. Sir, first, as you are saying that you are looking at growth in the fourth quarter YOY, just trying to understand a little bit more on that front, because as I can see, couple of projects we haven't started or execution is not picking up, and most of the projects are near to completion. So how much are we expecting first particularly on the recent one, the October, where we got appointed at Delhi one, Karla, how much execution are we expecting? Second, the bigger one is the Maharashtra projects. So there, how much execution our entire pending order book will be over by fourth quarter? And the same is the PWD Rajasthan projects also, because these are the smaller projects, but in terms of the overall execution, if I look at, needs to pick up much in the fourth quarter to see the growth YOY.
See, the balance orders, as you already said, that few of the orders where the balance orders are from Maharashtra and state PWD, but not a big size. It's just 140 odd crores of orders in balance. No significant execution would be there, as we can see. If you are looking at the Q4 execution, mostly we are at the stage of completion, and when we are targeting about DV4, say just 70 crore left out, and which would be completed during this quarter. say if you are talking of any of the HAM projects where the all balance 2 and the further 4th HAM is progressing well, which we believe that some 100 odd crore execution is expected in Rewari Bypass 4, that is the 4th HAM project. So with that, mostly if you see private projects like Hapur Moradabad or IRB, we expect that about say 170 odd crore would be executed during this quarter, and the balance would be completed in Q1 of next year. And then Mancherial Adani project, the execution is at a very fast pace, along with the NTPC, small pondage transportation, which is there along with the project. So there again, we are expecting some 200 crores of execution. So with this, some Delhi Vadodara package 8 and 9, where the significant chunk is left out as of now, where their contribution is not less than the 350 crores during this quarter. And the Delhi project, which recently has been picked up with a fast pace, there again, not much, but some 70 odd crores of execution is expected from that. So if you see altogether, we would be in a range of 1,000 crore plus in Q4 and even more than 1,000 crore in Q1 of FY23.
Okay, that's great. Second thing, just wanted to understand in terms of the previously we were targeting 10% order inflow from other projects other than the road, but haven't received anything. So anything to mention in terms of the bid pipeline, or are we expecting anything in this February and March in terms of the order inflow from other sectors?
No, see, definitely we were looking at about say 500 odd crores from these 2-3 sectors, but nothing moved as such very fast. And the railways, the bids which we were expecting, which we are likely they would be next year only. But in JGM and water supply, we are already tied up with say one of the JV players, and so they are looking for say few of MP and Rajasthan and these projects. But we are not looking very aggressively into these sectors. We are looking very cautiously and may or may not in this quarter, but definitely for the next year we are keeping up.
Okay. Third is on the HAM. You mentioned that another 150 crore to be infused in this quarter, and how about the next year and the FY24? How much to be invested, and what about the monetization 3 HAM projects where we were talking to the investors? So what's the status on that front?
As for the first time talking about the monetization, the discussion which was at a very advanced stage, which we as of now has been put on hold, just because say few things, as we believe that once we complete the entire execution of these 3 projects, then and as our O&M in one of the projects has already started, then I think it would be a right stage where we would be getting our fair valuation rather than just looking at the valuation which they are proposing. We are not okay with that valuation. Number 2, that we can just continue for a 6 months or 1 year period, and we do not want us to sell them desperately, and we do not require to be very eager with that. So balance, if you are talking of the equity requirement, which is already guided, there is 1137 total equity of 290 already added, some 745 is required. The during the current year, not much of the equity is required in the existing 4 HAM projects. It's just 65 crores of equity which would be added in these projects once we complete these 3 and balance in Rewari Bypass, some 25 crores which is required. And 140 odd crore rupees would be for these 5 HAM projects, wherein we are looking at Raipur Visakhapatnam, AP1, where 75 odd crores of equity, which is equivalent to 50% requirement of that. And in Khammam Devarapalle, package 2, where it is at an advanced stage, but say this is quite an optimistic number. It can be say in Q1 of next financial year. So next year the total projection is coming at about 355 crore into the new HAMs and 16 crore in the older one, taking it to 371. And 24 projection is 214, and likewise in FY25 it is coming at 55 crore.
Okay. So broadly, what I understood in terms of the monetization, we are comfortable, and most likely the deal can happen only at the end of FY23, and maybe the cash can come in FY24. Is it the right understanding?
Most likely FY23 end, we may expect that the transaction and entire cash transaction at least 50% is expected, because 6 months in any case post completion it is required. So we will be in a better position to crack the deal, and this transaction can be done within this financial year.
And we continue to maintain our stand. Last time we talk about that we can take another 6,000 crore HAM projects, and till that we do not need any monetization or raising of equity.
Yeah, correct. I think with this guidance with the number which is projection of FY25 with the existing HAM, and if we can add some 3,000 year on year, there would be not a big challenge.
Okay. Lastly, two things in terms of data points. Capex, how much done? How much left in the fourth quarter? And last time we talked about 75 crore each in for 23-24. So is it maintain guidance? And numbers on retention money, mobilization advance, and unbilled revenue?
Say if the capex is required to only maintain capex already done, and some 25 to 30 crore more big number, that would be all within the range. Yeah. There's some voice coming up. Now it's
okay. So you said in 9 months, how much have you done on the capex front?
50 odd crore being added, and not more than 25 would be required for this quarter 4. So we are within the range as we have expected that we would be requiring. And we are talking of what year? This is the debtors and receivables, other things.
No, retention money, mobilization advance, and unbilled revenue for as on December, and if possible for as on September, what was the number for the same thing? Retention money, mobilization advance, and unbilled revenue.
So as far as debtor is concerned, it is at 556 crore in this quarter, increase from 445, which was in September. That has been significant increase into it because we have not taken much of SPV, where earlier the balance now it has been increased. Earlier it was from 77 crore, now it has gone up to 120 crore because we are at the refinancing stage of all these 3 HAMs. And where we believe that I think we are getting refinancing at a very better attractive rate. So with that we have not taken. And if you are talking of the others like IRB is at 155, and if we take into account IRB total, where IRB and retention money and and debtor of IRB, this is coming at about 235 crore rupees total altogether, and which has been decreased from earlier one of 269. So there is a slight decrease in total IRB receivable, total retention and this. And NHA is 155 crore. NHA is all 3 DB projects and one of the older one. And then Ministry More and State PWD project, it is a 55 crore. Adani, the way this 55 crore is debtor receivables, and say around 35 crore is total retention and unbilled. So that is all about 556 crore breakup. And retention, say few of the others are SPV retention is 35 crore. The NHA retention, this is at 40 crore, including both. And other PV, this PWD, GVK, these are others about 35 crores.
Okay. So, yeah, sir.
So unbilled is about same range as was earlier, about 300 crores. This not moved as yet. But definitely there has been some new unbilled as we have seen that these are all new projects where the mobilization and most of the activities were crushing and the mobilization is going on. There's a 50 odd crore rupees is from the new projects only. These are Raipur, Visakhapatnam, all 3 or Khammam and then UER Delhi project. So where this is unbilled and a few of the older projects were there which are of NHA older projects where the reconciliation is going on. So these are some 40 odd crores from them. So 100 is that money and remaining is all unbilled, which is quite, say we are getting it and some unbilled being created every month. Like NHA is coming at about 120 crore rupees, like in these 3 projects.
Okay, so on data's front, previously we said that by end of March it will reduce to 400 odd levels. So currently, as you said, 556 crore. So there we are confident that it will come down to 400 odd crores.
As far as SPV is concerned, entire receivable is in our hand. That we, if you are talking of IRB, we have received some 65 crore during the month of January itself. Because once their entire transaction which we have done, they have done, and everybody is aware of that, the money is flowing in. And we are expecting that by April, they are also targeting by April, we should finish this Hapur-Moradabad project. So with that, there is not a big challenge if you would be in the range of 400 crores of debt, crore of debtor, and retention would be drastically reduced. Again, because in SPVs, the retention is to be released on completion as a EPC agreement. So again, there would be, and then we are just submitted the bank guarantee to IRB and Adani for the retention. The same. So we would be in the range of about 800 odd crores of total unbilled retention by end of this financial year.
Yeah, so broadly that the debt level will remain at the same current 300 odd crore debt level will remain.
Yeah, sure. I think it is not going to increase even 300. It would be in some range because we have seen that there is 185 odd crore of FDR plus cash and bank balance. And this is likely to increase because we have seen that if we are going to get some 200 crore plus from these three assets, and this would be a bit improved.
Okay. Thank you, sir, and all the best.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address queries from all participants, please restrict your questions to 2 per participant. Time permitting, you may return to the queue for your follow-up questions. Next question is from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Good evening, sir. Thanks for taking my question and congrats on great execution once again. Sir, just 2 questions from my side. So last 3 years we have seen NHAI has failed to basically award more than 5,000 kilometers of orders. If I look at FY19, 20, 21, of course 21 was impacted by COVID. But even this year, as you mentioned in the beginning in your opening remarks, they've awarded some 2,400 kilometers in 9 months. So most likely they would maybe end up at 4,000, 4,500. At the best, I think 5,000 kilometers is what we're looking at. So I think last 3-4 years, I think we'll have a muted kind of a track record from NHAI. And given that this year also, the total capex for the government, for the NHAI is flat as it was last year. And on top of that, I think there would be more and more, I think the cost increase in terms of, for NHAI, in terms of steel and cement prices. Do you believe there is enough opportunity left from the NHAI's pipeline for players like us with the competition increasing, as you rightly mentioned, there are so many players coming in, for us to be able to basically satisfy a 15 to 20% kind of a growth rate on a consistent basis for the next 2 to 3 years? Any light on that would be helpful. And second question was basically, sir, just wanted to take your, so actually if I can get that answer first, I'll probably come to my second question after that.
Yeah, sure. I think as you have having the concerns that regarding the existing year's order total, it would be in the range of 4,000 kilometers. So never it has been like for last 2 years it is in the same range. And even then, most of the all companies, middle and large, they are maintaining good range of say as far as ordering as well as execution. So that is not a big concern in this year as well, though definitely for an entire year, so last one, say December to this December, it has been impacted. EPC margins and EPC projects were almost dried up. They have been taken by most of those unlisted and say predominantly small and mid-sized players. But again, if you are talking of HAM, where the projects are all there, in this current year, they are again looking at about 1,200 odd crores of another bidding to be, and they have already say called the bid for many of the projects which are likely to say be awarded in this financial year only. And as they have guided for the next financial year, also even next to next year, the Bharatmala 1 balance and Bharatmala 2, there is significant some 13,000 odd kilometers to be awarded. So it gives a fair chance of good opportunities coming in the future.
Okay, sir, sure, got it. And so my second question, just the last question from my side is, we are currently working with both IRB and Adani Group, and both these companies have basically won the huge Ganga Expressway project contracts. So just wanted to basically pick your thought on what do you see in terms of opportunity of working with them again? Would we be willing to work with them again on those projects or on an EPC basis? Are there any talks that have already started with them? And if at all, what could be the timeline for the same?
For sure, I think the discussion is very much on. They are very keen and we are also that keen. But ultimately the end that if we can see it to our total order book breakup where the private order is not much of a significant say portion is left out. And within next quarter one, say by quarter one, that will be almost zero by all completed. So we believe that with the good association with IRB, fourth project we will be completing, and with Adani, there's a good experience. They are very much keen to award to a prominent players like us So discussions are quite on, but again, it is very much that without compromising and without looking at the discounting on the margins, we would not be very much interested. We will be looking into our intact that margins, range of margins.
Got it, sir. Got it, sir. Thank you so much for taking my questions and wish you all the best.
Thank you. Next question is from the line of Jainam Shah from Equirus Securities. Please go ahead.
Good evening, sir. Congratulations on a very good set of numbers. Sir, as you mentioned that around 147 days early completion in one of the HAM project. So, and 3 to 4 projects are nearing completion. So, how we are factoring the bonus on these projects? Like, are we factoring in this bonus in this 4Q or 1Q, or how we are going about that? And any ballpark number that we have assumed or something like that on these 4 to 5 projects?
No, definitely, as we are at a very advanced stage as far as execution of the second HAM as well. And most likely we would be in that range to receive good amount of bonus in that. But again, if you're talking about Gurgaon Sona, it is already ruled out, but because of extension of time already given for the COVID and whatever reason, that the bonus is not applicable, right? And Delhi Vadodara package also, though it is ahead of the schedule, but we are keen that how the NHA stand would be there for the COVID extension regarding the bonus. And for Delhi Vadodara package 8 and 9, we are very much ahead of schedule, and we believe that if at all possible, we would be targeting at the bonus as well.
Okay. Thank you, sir. That's it from my side.
Thank you. Next question is from the line of Vineet Anand from MK Global. Please go ahead.
Yeah, thanks for the opportunity and congrats on great set of numbers. Just on the incentive side, the PCOD of Rewari is also done. So there also our incentives are not going to be there?
No, it is there. It is there. So basically, there are two types of, saving in the days as 147 days. Out of that, around 75 days is where the eligibility is clean. Okay. And about, say, another 70 days, it is some EOD given for the COVID reason. So what exactly would be the NHA stand? That will again depend. Though we are eligible for the complete 147 days bonus.
So even if it is for 75 days, what could that amount be, and when will that be accounted?
I think accounting would only be in the Q1 of next year only, because once we achieve the COD, then only this entire COD we expect that in month of March or April we will be completing entire portion of it. So next year only. But amount we have not calculated exactly what would be the number.
Okay. Secondly, you did mention about some change in the bidding from the HAM. Recent some bidding change where some of the smaller players which have HAM, there would be some difficulty. Can you elaborate on that?
Probably not much of a idea about that. Those players, they are struggling definitely, as we are getting the feeler that because of that reason only they are restricting those players who are their exhausted bid capacity with the L1 status. And earlier it was being calculated based upon the appointed date status. So with that, I think the struggle is going on. But we believe, I think, with this sort of a restriction where, and if the bidding capacity is not there, they will not be able to bid. With that, we are expecting that genuinely those players would be bidding where they are having good appetite and capacity.
So you're saying that those players who have an L1 versus earlier, what was the difference? So that those players would have been restricted from bidding new HAMs.
Yeah, it is very much there. Now they have given a new guideline for calculating of the bid capacity where they can bid or say anyone can bid or not. So if it is exhausted, if any of the bid capacity being exhausted, calculated basis is earlier it was an appointed date assignment. So if you see to our number even, if we are yet say 5,000 or 4,000 odd crores of water book is yet appointed date is yet to be declared. So earlier they were discounted. Now they will be considered.
Okay. So based on your L1 minus your appointed date will be basically the number rather than just the overall number.
Bidding capacity will be reduced then.
Okay. And secondly, I think you did briefly touch that this year, obviously non-road we have not been able to do much. But, as you also rightly mentioned that Bharatmala 1 and 2, probably the next two is where the busy. But if you have to diversify, probably you need a few years of experience in those sectors, because all of those sectors, whether it is railways or anything else, have their own set of players. So how do you want to, go ahead in F23 with at least some, experience or inflows in some of the sectors like water and railways? What is the preparation? That's what I was trying to understand.
I think for railways, almost 75% to 80% is identical activities which we are doing in highways. So not much of a strong expertise required for that. And definitely in the market, if you see that not many of the players are working for railways. They are all common ones who are working for highways as well as railways. And not many of the projects have been in the recent past being awarded by railways. They are now very much like rapid rail or NRCTC, or if you are taking high-speed density network. So these are all bullet trains. So these are all new opportunities which are coming in, which is a similar kind of experience being required in that which we are already having in the highways. As far as water sector, definitely we had good experience in completing some 450 odd crores of water supply projects in Rajasthan as a subcontractor. So with that, it's not that the expertise would be required as a technical know-how. We are having the design team to do so, and execution we have done. So only a part of it, it's a matter of opportunity, or right opportunity or with the right price.
And you feel the margins at EBITDA and working capital would be similar?
I think significant portion would not be there in these sectors for even next year or next to next year, if we just take into our projection that within next 2-3 years it would be 20% or 25%. So it doesn't make much of an impact with that, even if there is 10 days this or that side.
Yeah. Thanks. Those were my questions.
Thank you. Next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, thank you for taking my question, sir, and congratulations, very good set of numbers this quarter. Sir, my question was again with respect to the non-road orders. I think when we spoke the last time, we were made to believe that you placed bids for water orders as well as railway orders. Possible to share, what happened with these orders? Whether these orders have already been declared, or the tenders have been kind of pushed forward, and if declared, we don't seem to have been able to kind of manage any of these orders. So is it because we were not able to kind of have our margins in place, which is why we were required to kind of settle without any order in non-roads, either water or railways?
You see, I think as already given that in the earlier question, that we are bidding for railways as well as highway, this water sector, and say in UP or MP and Orissa, even Rajasthan, so there are not many bids which are likely to be bidded, but they have been extended for last few months. Definitely in February and March, there are chances that we may get one or two, but we believe that what very much we have projected, given the guidance last quarter as well as before that we are very keen to add these two new sector opportunities. So, had it be anywhere, but important is without compromising on the margin. So this we are looking at it with a very serious note. But sure, definitely there are big opportunities which are coming in these two sectors.
Sure. And when you say margins, you're not willing to kind of compromise. You essentially are implying that you want to have margin in line with what you get to have with your blended margins, or the margins that you generally get to have with, let's say, NHAI EPC orders. Because I am assuming, NHAI EPC, as you, I think in your opening remarks you said, you would be able to make around 13-14% with this Karnataka, which is lower than our blended average. So when you say, you're not willing to compromise, you're looking at 16% margin in these segments, or you're ready to settle for 13-14?
No. So TRR weighted average of each and every say sectorial, if you see that the HAM projects, which earlier are in the range of 30-35%, now they are increasing, say execution has increased to an extent of about say more than 40%. Likely in the coming year it would be in the range of 50%. Well, the margins which we are taking as further an opportunity, that we in the range of 18% or that range of margin. So with that, you can take the weighted average of any of the EPC and HA projects where it is targeted at about say 12, 13, 14 range. That is where.
Okay.
And then any of the private, that is again at about the similar range. So with that weighted average is about 16 odd percent. We are maintaining that only.
Sure. So even for water and railways, you would look for similar kind of number only.
At least 12 to 14%, that range.
Sure. And so on Ganga, I mean, assuming, let's say hypothetically, let's say IRB or Adani, because of you're already in discussion, let's say, if they were to agree to your terms, in terms of margin that you want or mobilization that you would need to be able to kind of go ahead with the projects, how much would your appetite be? How much would you be willing to kind of take up in UP? If they agree to your terms out of the total number that they have?
So in any case, if you see to the total big opportunity, there's altogether some 20,000 odd crore with all four groups that they are having. And both of them are keen and we are also keen. But without, with the recent margin, you see minimum size of project will be 2,000 with anyone and maximum can be 4,000.
Okay, so we won't go beyond 4 is what you're implying, right? And then I think I saw somewhere in your comments, you spoke about refinancing efforts which are already underway for the hybrid annuity assets. Possible to share indicative rates? The idea was to try and understand whether, the bank rate had come down substantially, which is where there was this negative spread between bank rate and our cost, right? So, once these are refinanced, would you get to have any positive spread, or it will still be essentially there will still be some gap between bank rates of 300 basis point and your cost of debt?
No, of course. I think we are getting, at the present bank rate, we are getting 7.25% from NHA.
Okay. We
are getting it refinanced at much lower than that. It is coming out 7.15 or 7.25 or that range of seven.
Sure. And
we are getting on it.
Sure. And would you also be allowed to kind of take, just to continue on this, so it's a continuation only, just want to clarify on this thing only. So would you be allowed to kind of take some top-up loan on this? If you get to have this refinancing go through?
No, we will never be interested in getting it top-up.
Sure, sir. Thank you. I have a few more. I'll come back in the queue. Thank you.
Thank you. Next question is from the line of Dipen Shah, an individual investor. Please go ahead.
Yeah, good evening, sir. Thank you for the opportunity and congratulations on a very good set of numbers. Sir, most of the questions have been answered. Several people have asked questions. Just wanted some more insights into the next year. Like there have been various questions about how do you expect to grow at 15-20% next year. I just wanted to understand, say whatever be the revenue of the next year, how much is the visibility from the existing and ongoing projects into the next year? Like how much would the existing ongoing projects contribute to the next year revenue? And what could be the proportion between HAM and EPC in the next year, whatever revenues you achieve, maybe 15% growth?
So if you take into consideration, first I am talking about the EPC and HAM. The EPC and HAM next year, I think it would be some 40 to 45% of the revenue would be coming from HAM. And balance would be coming from any of the EPC. It can be any private or government EPC, NHA.
Okay.
And if you look into the total orders which are under execution, and with that, if we believe some 1,000 odd crore of execution during the Q4, so with the balance order which is to be executed, although the total appointed date they are under execution, we expect that about 25 or 100 crore would be executed from those projects only.
Okay. So if we are looking at a 15% growth, which is about 4,000 crores, of which 2,500 crores will be available from the projects which are currently undergoing and which are under execution.
Correct.
Okay. Thank you very much, sir, and all the very best to you. That's it from my side.
Thank you. Next question is from the line of Vineet Prasad from Investec. Please go ahead.
Yes, thank you, sir, for the opportunity. Just wanted to have your views on the competitive intensity in the road sector. Do you see that abating, or given NHAI has further extended the relaxations up until March, we think competitive intensity should remain the same. When do you think this should subside?
So as far as the relaxations are concerned, which has been extended to 31st March, it doesn't say for that reason that is the aggression which is going on because of that reason. That is basically other factors which are all there, which we have discussed earlier. That say being most of those players who have been allowed with the ease out in the pre-qualification criteria, that is something which is troubling each and every one. But again, if you see that with their appetite and with their whatever say size which their capacity, debating capacity already squeezed, means limited capacity is available, and already the appointed date, or say earlier it was appointed date, now it is say L1, whatever is being there. So with that, I think there would be limited numbers which in coming bids we would be seeing, and in HAM especially we can see corrections in a positive way.
Understood. Thank you so much.
Thank you. Ladies and gentlemen, we would request you to please limit your questions to 2 per participant, as we have several participants waiting in their turn. The next question is from the line of Jiten Roshi from Axis Capital. Please go ahead.
Good evening, sir. Congratulations, set of numbers. Sir, my question was on the water supply project. So in the budget, the government has announced the Jal Jeevan Mission scheme strong support. So where do we see, or where do we focus mainly, in which region? Like we will be focusing only in the home state of Rajasthan, or we might be focusing in UP also?
No, we are looking at definitely in UP because of this code of conduct. I think the bids have been extended, and they would be all now in month of March or April. But earlier, I think they were all due in month of January. With that, in MP, these are all adjoining states which we will be looking further apart from Rajasthan.
So what size is the opportunity in these 2 states, UP and MP and Rajasthan?
As far as size is concerned, number of projects are, not many projects are there. As you see, there will be roughly some 40,000 odd crores of in all 3-4 states, adjoining states only. So, but then again, if looking to the size, if we are minimum size, we are taking on the 300 to 500 to 700, that size of a project, where a single project or 2 projects would be good enough for us.
Okay, so basically 40,000 crore opportunity in these 3 states, and a ticket size of 300 to 500 crore we are looking at to bid, right? And sir, on the Ganga Expressway project, so we are expecting we can get some subcontracting work at a good margin of say 18%, which we get it from HAM and from the private contracts.
Let me correct it. It would never be 18. For any EPC project, it is rather difficult. It's not 18, but we are calculating at about say 15, 14, that number.
Okay. So, sir, don't you see competition from the regional players there, because they would also be looking to get more projects, and we have seen EPC has seen a strong competition in NHAI. Probably this is a good opportunity for these small or regional players to get more projects. Then probably we can lose out on the inflows from this Ganga Expressway. So I'm just asking your view whether you will see the competition or the likes of Adani and IB are approaching directly to contractors like you.
Oh, no. Definitely, there are 2 ways to look into it. One is the rate, which with the local regional players, they are having added advantage that they can bid lower. But again, I think with the good experience with IRB and those where they are finding it very much comfortable working with HG as far as quality and timely delivery. So they would be expecting not to compromise more on that the rates they are getting lesser. But we cannot rule out. But again, we are at a promise, we are keeping our rates. We are not going to compromise on whatever discount if possibly they are getting from the regional players.
So, sir, what is the order inflow we are looking in FY23, and what could be the mix in between roads like EPCM and then newer segments?
Again, I think if we can take on cards, there's some 3,000 odd crores of HAM can be added in the next year, and with some HAM plus EPC, roughly about 300 to 2,000 odd crores of EPC in next year, and some other sectors again, say 700 or 1,000. So looking ahead, some 6,500 odd crores to be added in next year.
Okay. So last question from my side. Sorry.
Sorry to interrupt.
Yeah, I'll come back in the queue. No problems. Thank you. Yeah.
Next question is from the line of Parishit Kandpal from HDFC Securities. Please go ahead.
Hi, Aditya, congratulations on a good number. So my first question is on the 5 HAM projects. If you can give the timelines for each project in terms of month, when do you expect appointed date, and also update on the financial closure of these projects, if at all we have achieved for any project.
Yeah, so all these 5 HAM projects, NBG mostly done. We have received all the in-principle approvals for all 5 HAM projects, with even the recent one of OD5 and 6. And say the financial closure or the financial sanction, by 15th of February, we are expecting one of the projects where AP1, where already the land is at a very advanced stage, and NHAI, they are all insisting that as soon as we are getting the forest clearance, where first stage is already cleared. There is about 8 kilometers being affected out of 33 kilometers. But with that clearance of second stage of forest clearance, as soon as it is being cleared, we will be getting the appointed date. So with that, by March, maximum end of 15th March, we will be able to get the appointed date for AP1. And by that time, entire formalities would be done. Because again, there are 2 banks. One is the Indian Bank and Bank of Baroda. So both we have received the final sanction letter, and financial document is under preparation. If you're talking of the same corridor, Raipur, Visakhapatnam, this OD5 and 6. So they are the recent projects in the current year only. But again, they are considerable because of the same corridor. Land availability is really good, and Odisha government is very supportive, providing the land. So that way, only the forest is there, and some private lands are there. But again, if we can just drag it to maximum 15th of April or end of April, where we will be in the position to get the appointed date. Here again, one project has been written by a private bank, underwritten, and 2 of the public sector banks, they have closed the second one. In Khammam Devrapalli, financial closure, it is very advanced stage. Even SBI is funding both the projects, but they are desperately waiting for the concession agreement to be signed. As soon as it is going to be signed, within a month, they are going to give us the FC documents. So that is all about appointed date and the FC. But definitely Khammam Devrapalli, where earlier it was very much the problems, but now NHAI and they have all settled in some kind of amicable agreement. They have raised the demand of the rate of the compensation of the farmer, and now likely within 2-3 months things will be sorted.
Okay. The second question is on this. You did touch upon the last call that one-time price to book valuation you are comfortable doing the deal, and now you have said that you will do it maybe by FY23 end. So just wanted to know, were the bids which you got was how much below the book value, if you can just touch upon the valuation.
You are talking of the private orders?
No, HAM project monetization, sir. You mentioned that last time. Even if I get one-time price to book valuation, I will sell that asset. We'll go ahead and monetize.
Parishit, as for the valuation, I think anywhere, if you are looking at your books, if you really require money, so definitely on a desperate note, you can sell them out. And if you don't require, it is your deal which exactly one should come up. Now with the recent trend, there are not many, I think, bets on a TOT or say whatever mode they are coming. So it's not that it's a buyer's market as of now. Which we believe it is better to wait and just keep continuing your say O&M for 9 months or a year. So by the time the 6 months of the timeline which is required for the transaction to happen, that will be over. So it would make sense. It makes sense definitely, as we have taken this time.
Okay, sir. Sure, sir. Just last thing, sir. On recently, we have seen a very high volatility in the stock prices. Any specific reason in your knowledge?
That is, you better understand. We are not very much aware of that what exactly has happened. It is a negative to positive.
Okay. Sure, sir. Thank you.
Thank you. Next question is from the line of Anand Das from Das Capital. Please go ahead.
Yeah, hello. Thanks for the opportunity. I wanted to understand the impact of raw material inflation on the company's margins. So I think operating margins have barely dipped by roughly 1% quarter on quarter. But if I see cost of materials consumed or contract and site expenses as a percentage of revenue, So that's keeping very steady. So, but in the 2 quarters, raw materials such as bitumen or even fuel expenses, fuel prices are through the roof. So how does the company manage to sustain these margins without? So is there a price? The costs are transferred to the cost escalation contract with the customer, or how does the company manage to keep the margins intact?
Yes, so the commodity price hit is there. It has been last year, entire year, there big wallet, big impact is there. But it's not that equivalent to 1% hit has been, we have experienced that from quarter to quarter. It is about hardly 0.3 to 0.4% look into the EBITDA level. But we have been protected in all the contracts through a price variation clause. But as you see that because of the various components wherein I think we see the crude oil, there's diesel, bitumen, LDO, and then steel and then cement. These are various commodities where the indices doesn't cope up with the same, price indexes doesn't cope up with the same as we are going to as impacted as far as execution as far as procurement is concerned. So what exactly is there is not a big hit, and on quarter-on-quarter basis it is now stable. Things are not going to be, as far as we are not believing that more impact would be there. And again, as far as if you're looking at the total interest cost, which is now gone down if you compare last year-on-year basis, depreciation has at a stable stage if you see, but the turnover has gone higher. So with that, we are looking at good PAT margins. That is what is visible.
Okay, thanks a lot. That's it from my side.
Thank you. Ladies and gentlemen, we would request you to please limit your questions to one per participant due to time constraints. Our next question is from the line of Shreyans Mehta from Equirus Securities. Please go ahead.
Yeah, sir. Congratulations on a very strong set of numbers. So 2 questions from my side. One, as far as we are seeing a lot of heightened activity as far as BOT is concerned, especially on the bidding side. So are we actively looking at that space? That's one. Secondly, sir, in case if we go for, say, hypothetically for, as the earlier participant said on the BOT EPC side, so will it be on a fixed price contract or, it will be a pass-through contract?
First is the BOT space. I think it is totally ruled out. We have never been interested in doing so. And second is, say, working as for the BOT developers. So wherein I think it was fixed price of existing, whatever we are doing, wherever we are doing for Adani and this IRB, it's almost a similar model which you will be doing. IRB is going with a star rate contract where they fix the star rate for fuel, and then some of the price variation being provided for the diesel and few of the other commodities. That is one. And for Adani, it's a regular EPC contract as the NHAI contract as the contract agreement of NHAI.
Got it. Sir, and sir, as per latest media reports, we are hearing that Jewar International Airport will come out for tendering. So are we looking at that project?
No, not yet.
Sure. That's it from my side. Thank you very much, sir.
Thank you. Next question is from the line of Meet Parekh from Anand Rathi. Please go ahead.
Yeah, thank you for the opportunity, sir. My question is regarding the equity requirement. I just couldn't get the numbers previously. If you can provide the yearly equity requirements for FY23-24.
Yeah, it's a total 1137. Out of that, 290 already done. So during the balance part of this year. Okay. So the balance part of this year, we are projecting that say about 150 something crores would be added. And then if you see the total projection for the next year, FY23 is coming at about 370. So next year, FY24, it is on 214 crores. So total balance requirement is coming at 745 crores.
Okay. Thank you so much, sir. Thank you.
Thank you. Next question is from the line of Shikha Doshi from Axis Securities. Please go ahead.
Thank you, sir. Congratulations for the great set of numbers. My question is regarding the working capital days. Could you let me know for what was the number for 31st December and what trend is expected for Q4?
Yeah, sure. There is a bit increase in the debtor days, but inventory days are all stable. It is even lower than the last quarter. And the creditor days, they are all stable. There's nothing, much of a movement as far as negative is concerned. But the total net impact is, even now we are stable at about 42 net of working capital. Net working capital days, yeah.
Okay. And for Q4, what trend? Like, do you expect it to decrease?
Yeah, obviously, we are looking at the receivable part, which is likely to go down, and which would be in that range only as we have seen the month of quarter 2. With that, I think some 900 odd crores of total receivables, neither the debtor form or any other form, unbilled or no. That gives us indication that we would be in the range where the correction on us, where the lowering down of the working capital days.
Okay. Thank you. That's it from my end.
Thank you very much. Ladies and gentlemen, that was our last question for the day. I now hand the conference over to Mr. Harendra Singh for closing comments. Over to you, sir.
Thank you. So thank you everyone for your participation in our quarter 3 FY22 earnings call. In case of further queries, you may get in touch with Pareto Capital or feel free to get in touch with us. We look forward to interacting with you in next quarter. Keep safe. Thank you.
Thank you very much, members of management. Ladies and gentlemen, on behalf of HG Infra Engineering Limited, that concludes today's conference call. Thank you all for joining us, and you may now disconnect your lines.